Good morning to everybody. And I have right here a Google chart. This one is a daily. So Google has violated the 50-day moving average, the white line. It put a top end up there. And actually to tell you that the 200-day simple moving average, I just want people to know that that's 553. That's the green line. This line here is the 100-day at 566. Now, one of the things that we're going to talk about is what a wall of resistance it would be. We are going to get a trade off of the bottom because right now we don't have a daily sell signal. Not only that, it's going to hit it either tomorrow or one of these 5 days starting Monday tomorrow. And there's going to be a great trade on the call side of this market. And so that Tommy and Johnny and all you guys, you know what you got to do. It is going to make an intraday trade on the shares and the calls. So I'm also just going to show people here on a monthly level. This is a monthly chart of Google. And the 10-month moving average speaks for itself. It's 569. This was that wall of resistance up here. These were the previous support levels, including the monthly wicks. And so the pullback is in play. It will bounce. It is a leader. So that is what the monthly moving averages look like now. When we get into Google GOOGL over here now, and we pull up the weekly, it's very important to understand one thing. That it's not nearly as overbought as it was at these tops in the GOOGL. It's very clear right there. And this particular line is what we call a 50-week moving average. And we're violating the 10-week right here. And not only that is a short-term trade, because here's the thing. You have a declining 20-week. That's ultimately the support at 563. If we breach it, 539 is a 50-week. And this is where we're at for the short term on GOOGL. So GOOG, which is this symbol here, that's already violated. That symbol, the GOOG, it violated the 10-week moving average. Very clear. So we're going to take a look at a lot of options on Google. Here's one of the things that we're looking at, you guys, is that 560 call. It's an 816 monthly. Yeah, you could say it was up there and deflated. Yeah, and you could say it would have to come down. And yes, GOOGL and Google, this is going to be a great trade. I just want people to see what the 560 call looks like for the actual 816. Not only that, here is right now before us a $40 price a week ago. It was up there. Now we're deflated down here. This is not this is what happens when they get inflated. They got to get taken to the woodshed. That's what markets are about. Markets are not here to accommodate inflated prices forever. Sorry. There's a great trade in this 816. That's the 570. And I'm also going to throw in here the 555. 816. Yeah, it was above $50 over here. And yes, it's now deflated as always, the way that market should be, the way that I've known them to be for the last 30 years. Except for what? You got a big ass software program that leveraged up all these assets and leveraged up corporate of America, but now there's a price to pay. This is a great one right here, 816. We're going to go ahead and put that in the market minder. That is a 555 that's still in the money. We are going to take a look at the 565, which is right there, 816. We're building out our market minder. One of the things that we can say is, you know, the old saying is, well, it's come down into that inflated, from inflated to deflated at $15 a contract. And here's another thing that we're going to do. We are going to throw this one in because this is a trade. And that contract up here, oh yeah, at $31, don't you think that was inflated? They never will stay up here. Here's what happens. They got down here to $6. That is the 580, 816. Now, these are for some of our big ass traders that will buy 100 of those contracts. And I'm going to put that in there. I'm not going to stutter. Do I got the 570? There's the 570. Yeah. How do you like that one? $40 down here. That's the 570 one. That's an 816 one. All right. So here, let's make sure that we roll it in there. There it is. Call. Now what we are going to do is take the actual put side of this market on a put option over here. I'm sorry. On a put option that got down here too. It finally had a little bump. Now this is that 560 that goes right there, and this is a regular. But one of the things that we want to know about is this side, even believe it or not, on the GOOGL, that 550 put, well, it's not inflated, so it's going to be a ratio balanced trade. So we are going to take a look at that 580 put. Now these are, and we can see they still could go higher. The problem is in the short term though. So call, I got it. Oh, so call put, there it is, 70, and let's roll it back with that 70. One of the things that I can say about the call to put strategy right now with Google, it is short-term oversold, but we're going to get a bounce off of the bottom for an intraday trade. I just want people to see the 580 put. You can see right over here that the low on that thing was $2.63. And a good trade like this, 100 contracts, oh boy, you talk about $13, you do the math. It was here, 240 to 1530, right here. So, having said that, we are also going to take a look at one other contract, and we're going to put it here for September. And what we're going to do with Google's September one is we are going to go right back up to the 590, and this is a 590 call. That's $28, and now this one down here is one that we're looking for as well as anywhere from 1 to 3 to 5 days, no longer. So there's that one there. I'm going to be monitoring this particular 570 call, all right, and where they have come to, and I'm going to throw that in there. And not only that, what I am going to do is I'm going to throw in the 570 put. Now, that September monthly, that low was 480. They popped that thing to $17. What a nice trade that is. Yeah, it's got me excited all day long. So, between the call and put ratios, we know exactly what Google is going to do, and we're all over it tomorrow as far as the weekly goes, and as far as the monthly goes. We're ready to lock and load, and one thing I'm going to do is conclude the GOOGL, which is the one that we want to take, and the weekly moving averages. I just want you guys to see it, because here's the thing on the GOOGL. One more time, and here's the one more time. I am going to say that 20 week, once again, we just are going to have to set alarms. That's 563. Now, when it hits it, it bounces, and it's already violated that. So stop market orders could get taken out all the way down here to the 40 and the 20 week on an intraday process we'll let you know how it works out. We know it works.